finally start to see some real higher time frame movements again. BTC is not showing any strength whatsoever from this demand zone. ETH is losing its local lows. The SPX getting rejected from this area once again. We have massive liquidations on ETH and BTC and a big nuke in funding rates. And we have some real world fear catalysts shaping up. What all of this means in today's episode, let's go. Hello and welcome guys to another episode of Liquidity Report. We have finally some higher time frame developments that are of interest as swing traders. I'm super happy once again that I kept this short as hedge, that I did not TP too much, that I kept a good chunk and on good size. I explained the reasons in the last episode simply because it's super nice to have those hedges for the mental game. I go long, I still have the short. My short can easily cover those long stop losses should I take them. And what I'm saying for weeks already, we had no real fear catalyst in the real world. Crypto news are not reliable anymore. They are bullish basically ever since we hit 100K. And TradFi was not showing any signs of fear. We have that now. We have the Iranian war seems to escalate. And we have Trump once again swinging the tariff hammer. And so it seems we are heading for some real world fear. This does not mean we need to reverse immediately, but this adds now confluence for us to be on the buy side. We also talked about how accumulation works, and the accumulation takes time, especially higher time frame. It does not happen on one day. And usually what happens is we nuke into some kind of area where people are interested to buy. We spend some time there. Many people are still like somewhat optimistic on the first day. On the first days, they're like, yes, I should buy here. I know I should buy. Let's say the more sophisticated traders. And then we have some aggressive bounces. People chase those bounces because they're percentage-wise pretty huge. People get FOMO. People FOMO into positions around here. They try to keep the stop losses tight. And then once we sweep those internal lows, lots of people get liquidated. We can see that in Orderflow. If you look here on BTC, we haven't even lost this low, but we have 60 million in liquidations here. And we haven't even really swept this low aggressively. This was to be expected. And in accumulation phases, it's usually exactly like that. We bounce, people are still somewhat optimistic. We start losing internal lows. Maybe we sweep even the external low. Who knows? I don't want to predict that. If we do, it might get hard to find some refined entries. If we don't, we have already some. And what this is usually doing with people is that after such a long time, and I mean, we spend now around 20 days already down here, people get the most bearish right before the move happens. So if you look at higher time frames, it's usually always that people know, okay, it's going down, I should be on the buy side, I should be on the buy side. And then the more time we spend around those higher time frame reverse levels, the bearisher people get, because there might be some real world catalyst shaping up, fear catalyst like we see now with war and tariffs and chaos and uncertainty. And this is usually what happens after such a long time. If you remember this move, we also had the Iranian or the Israeli war escalating. People were super fearful. Everybody was waiting for 22K. Price just kept on moving higher. We created those big candles. Suddenly those ETF news popped up. People were like super excited for a short period. Then it was fake news. Then they got liquidated again. And then the real move really happened. I mean, this was like pretty much the meat of the move of this whole cycle. And the most fear was pretty much down here, and it increased. People got more bearish the higher we went here. So this is how accumulation works. It takes some time and it makes people switch their buys at the worst possible time. So this means that the tariff news, the war news, I mean, especially the war news are like really bad news, right? I do not wish anybody to live in such regions, having to deal with war, having to deal with this kind of violence. It's pretty sad to watch that the world is still like that. But for the markets, usually around that time, this is like the real fear catalyst we were talking about. It's for a reason that it happens now. It's usually for a reason that they promote or not promote, that they push these kind of news around a certain time. And this might be a good confluence for us being long. That said, I'm still pretty happy with my risk exposure. I don't need to over-risk anything here. It's really not important to build those huge crazy positions because you have one single idea. You have like plenty of time. There will be a million different opportunities if you play the game for long enough. You don't need to have this one play to make it. This is just not how it works. And so my risk is pretty fine. I'm pretty happy with my risk exposure. ADA long, for example, still in profits here because I caught a good entry. Should it get stopped, I'm pretty comfortable with my risk. And I have this hedge, as said, which is paying me all those losses back very, very easily. And I'm still very confident in this short for a very, very simple reason. First of all, we broke higher time frame structure, right? We talked about this. Higher time frame structure is now in a downtrend, and we have several weekly candles now below this low here, which makes longs less optimal, but at the same time we are in discount, which makes longs more optimal. And with a close below does not signal that the market needs to go down from here like for the next months without ever bouncing. And so this is what I'm preparing for with those longs. And should we confirm somewhat a break of structure here internally, so if I look at the daily and we start creating higher highs here, because above this line, above those highs here, there's definitely liquidity forming. Let's remove this refined level, it didn't work anyway. And should we bounce from this demand, there's a lot of liquidity probably above those highs. And should we break structure here, I can decide to TP on my short very comfortably and take some profits and use them to reallocate myself should we go for those higher supply levels again. And it's a very simple game once you play it like that. People are usually like so much into refining, looking at 20 different time frames, looking at this level, at that, at 20 different coins, like being all over the place. But if you focus on a few majors, and for example, this is what I do in crypto, it's BTC, it's ETH, and it's ADA right now. I don't really care about anything else. And why would I? In the end, it's about RR. Doesn't really matter what your shitcoin is called, what they promise, whatever it is. Usually they all offer some similar kind of RR, simply because if you have a bigger performance, like let's say your coin maybe goes for 1000% to the next supply, your stop loss will be way wider. And that's why in the end it's about RR. Doesn't really matter. So don't be all over the place. Don't spread yourself too thin, and rather play your plays as good as you can with as much attention as you can. So that said, all of this means now I'm not adding any exposure right now. I'm happy with my risk allocation. I'm comfortable with taking those stop losses, and I'm happy should I be right on those longs. And as said, it's ETH, ADA being long, and it's still the BTC short. Another reason why I'm rather a bit cautious, besides the fact that we broke higher time frame structure to the downside, which we haven't pretty much since here, right? So if you took longs on the way up, you bought into the trend. You like aligned yourself with the trend. Here, ever since we closed below this low here on the weekly, you are trading now against the trend. And obviously, if you want to catch a higher time frame reversal, like the short up here, we need to trade against structure, but it becomes more optimal the lower we go. And the lower we go, the more I will be into longs and the less I will be on the sell side. Simple range knowledge, the deeper we go into discount, the more optimal the play gets. So this is reason one, we talked about this, but reason two is that majors, high time frame stock market majors also do not look super strong here. We have now the real world fear catalyst shaping up, which could be technically a reason why we just go higher from here. But looking at everything, looking at the structure, looking at what it does, it doesn't look that strong. And if usually, statistically speaking, if this doesn't look so strong, so if US stocks do not look strong, it's usually not a good time for being crypto long. Then we have the higher time frame break of structure on BTC and everything. So I have very limited risk exposure for that, for those reasons. Also, if you look at the Nasdaq, we have this range, and usually once it starts ranging, once it signals some weakness, it's rolling over for a bigger correction. And should this happen, as said, it's usually a risk-off environment. And those fear catalysts right now, they could also be increasing, right? So don't think linear, don't think, oh yeah, there's war, oh yeah, there's tariffs, this is a good sign to buy. Be flexible, because the whole tariff noise started here as well, and it was really the reason that prices collapsed and kept on collapsing. And it was already some kind of fear. I wouldn't say that tariff is like the worst thing for the world, but it was enough to make the SPX nuke 20%, which is a huge correction for the US stock market. And the tariff noise already started somewhere up here. People did not take it super serious because it was just tariffs, it's just Donald Trump, it's just noise. But it was enough to make the markets nuke super heavy. And so maybe that's the beginning of such a nuke. Maybe that's also just confluence for being long. And I cannot know in advance because I have no glass ball. I cannot predict the future. I can just predict probabilities, and I assess my exposure according to those probabilities. And the best thing I can do is to be flexible, to stay open, to have a plan and have a counter idea for this plan. And my main plan is that the whole thing, crypto, stocks, the whole risk market is about to correct bigger into 2026. And this is just the beginning. But at the same time, I don't want to be all in on this just on this one bias, because if I just have this short, my bias is always, okay, we go lower, we go lower, we go lower. And if it's not, if we don't go lower, I bet everything on this one idea. It's the same as the average crypto investor who's betting all on upside because everything needs to go up, up, up. I don't want to be the one who's just betting on down, 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 because it's a tough place to be all into one idea. And you see, that's why I have those flexible ideas covering many scenarios and exposing myself that I'm prepared for every eventual outcome. Quick look at other crypto majors. We have this incredible parabola on Tether dominance, and we also have this rejection with this big wick at the top and high volume from this range high. And as said, it's still, to me, what I wrote here months ago, long buy here is a good idea, because if we just keep on going higher for whatever reason, we have a clear invalidation. And looking at this, it's somewhat grinding higher on the weekly, which is not a good sign, technically speaking. But if I look at the daily and this break of structure, this retest of this trend line, it looks somewhat toppy to me. And it's still a great place to buy, to be on the buy side. This might be taking profit off the shorts, this might be building some new longs. And we need to entertain this idea that we are not rolling over from here, but simply also just sweeping this high and then rolling over, right? So it's not that easy. And everybody that is just sharing a macro bias, yeah, you should be on the buy side, that's super nice. It's true. But if somebody is not like sharing stop losses and invalidations, I think it's dangerous, because people assume, especially newer people assume, it must do something, it must reject, it must do this, it must do that. And then the risk exposure is usually not very controlled. And if there is no clear invalidation, people risk paying way more back than they could or should. And so keep that in mind. ETH BTC still sitting in this weekly breaker block in discount. We're also somewhat grinding a little bit into this level, but we have several weekly closes inside now. And it's still not invalidated. Everything is pretty much looking good so far. BTCD pretty much still doing nothing. Gonna be interesting what happens if we hit this range low and this daily breaker block. Keep it in mind. BWAL, I'm not sure if we talked about this the last weeks, but we have those major inflection points, March 24, then we hit the range low, June 24, September 24. Study it yourself. I made a post about this. You can find it in the Discord and on my X. And it's actually a pretty simple indicator. We hit something up here, we hit something down here. It's usually an inflection point for the market. You don't need to be a rocket scientist to just put your mouse cursor there, look at March 25 and think about what happened March 25, or simply making your own studies, comparing those charts. Don't overcomplicate it. It's a volatility indicator, but it's also showing some kind of inflection points for BTC and thus for the crypto market. Quick look at USDCD. I showed this chart many times before. I said this is pretty much air, so I would be surprised if we reject here. We rejected here, so to my surprise, But in the end, the question is now, is this enough for a higher time frame reversal? What happens to Tether? We had those bullish news around Tether. I made a video about that, and we are pretty much in the middle of nowhere. Obviously, looking at the full picture, this could simply be just like noise. It just reverses here because it reverses here because everything else is lining up. But I would also not be surprised if we sweep levels on majors like BTC and ETH and pump up here for whatever reason. We want to watch news around USDT here, and this would be a great level as Confluence. But it's just one chart. This doesn't need to align in order for us to take some longs, but obviously the more stuff aligns, the better for this long idea. And so this is pretty much it. Have an eye on the US stock market, have an eye on news headlines. I recommend to not dive too deep into news because it's so much noise and there's so many different opinions. It doesn't matter so much actually. What is the agenda that people get informed with? What is happening in the world is important, and having a look at those headlines is often enough. If you want to see those things on a deeper level, go for it. But from a trading perspective, the headlines are usually already enough because you know like the bias of this news already, because it's either like fearful, it's either hopeful, it's either bullish for the market, it's either bearish. The headline is usually screaming already what's going on. And so I'm just flying over those headlines, looking at different news providers. Keep an eye on the stock market. As I said, it's going to be very important what happens here, and this will determine what happens on crypto. Don't stick your head into the sand. As I said, accumulations take time. People get usually bearish at the worst possible time, and many people chased these aggressive pumps, looking at altcoins, some did like 30, 40, 50%, and people got bullish. People were like, yeah, it's gonna reverse from here. They added to their longs, they bought, and now losing this internal structure, losing 2K, losing those psychological key levels. Showed on Orderflow already how many people got liquidated here, how bearish funding rate turns. I mean, it's jumping around a little bit. Obviously, the candle is not closed, but we headed down to this level, it's the same like those big crazy liquidations, like here and here, where people really got destroyed. And now we haven't even lost external structure, and look how bearish, how negative funding rate is. This is what I meant by people go bearish at the worst possible time. This could be the time. We have now macro fear, we have key levels lining up, we have pretty much everything we need in order to pull the trigger, but still manage your risk, have clear invalidations. And if you're interested in how I read order flow in general, how I approach the market, I have this Discord running, it's free, and you have the study area here with all the things you pretty much need in order to be profitable. Obviously, the most important thing you need is time and consistency, but it's a very nice archive and a very nice community to share ideas. I also share all the setups we talk about in the videos here on a weekly and daily basis, and I update them more often than the videos because obviously it's way faster. So if you're interested in seeing me trade live, update those setups in real time, talk to people in the community, or simply have a look at the study area, as said, it's all free. The link is in the description of this video, so make sure you check it out. So guys, yeah, it's gonna be an exciting week. It's gonna be an exciting week for stocks. It's gonna be an exciting week for crypto. So make sure you have a plan and you stick to this plan. Stay focused. We talk later this week. Have a great one. Bye.